Good morning, Hong Kong, and welcome back to another episode of Hong Kong Insurance 101. This week, we're talking about product liability insurance. In episode 21, we discussed public liability insurance. That is to say, protecting your liability risk in the event that a third party suffers an accident due to your property. Product liability is a similar concept, but applies mainly to manufactured goods. As will be immediately obvious, this can be a really big deal. If you've ever watched the TV show Arrested Development, you'll remember that the Bluth family invented and tried to sell a number of dangerous products. The corn bowler is a really good example. This was a fairly dangerous product that was intended to fry cook corn balls. If you haven't seen this show, we've included a link to a clip showing the product in the description. The way in which the product was designed meant that it was virtually impossible to use without the operator suffering an injury, either through burning themselves or through electric shock. While manufacturing standards exist to prevent consumer injuries against this exact type of risk, sometimes products are launched into the market that some hidden flaw hasn't been caught by regulators, flaws that can lead to the consumer suffering an accident or injury. For example, maybe a batch of face cream has been accidentally made containing lead, or maybe an electric fan is manufactured with faulty wiring, leading to an increased risk of electrocution. Product flaws are pretty common in the automotive industry, where recalls can happen when a design flaw leads to a higher than expected number of accidents. In a global economy with ever-increasing manufacturing, new goods are being released onto the market at a rate where there is the possibility that something can go wrong in the manufacturing process or with the supply chain and cause damage to the end consumer. Product liability insurance is designed to assist in the event that this comes to pass by indemnifying manufacturers against liability claims with regards to their goods. If a consumer is hurt or even killed while using a product covered by product liability insurance, then the insurance will cover the liability claims that the manufacturer receives. So instead of being liable for someone tripping over, let's say, unsecured carpet in your office and breaking their arm, using the Bluth corn bowler as an example, the manufacturer would be protected against the financial consequences for someone burning themselves by using the product as intended. This can be a big deal for manufacturers as product liability claims can amount to millions of dollars and have the potential to tank an entire business. Premiums and claims are based on revenues, so the bigger operations can expect to pay more for their coverage than smaller ones. That's us for this week. We hope you have a great Mid-Autumn Festival. Please remember to like and subscribe, and don't forget to ask CCW. We're simplifying your insurance.